Remember all that noise around NFTs a few years back?
Oh, yeah.
Digital pictures selling for just crazy money, and then it seemed to just, well, vanish.
Mm-hmm.
You sent us a whole stack of articles wondering if NFTs are even still, a thing. So let's really dig into what's happening now.
It's pretty remarkable how the whole narrative has flipped, hasn't it?
Yeah.
Not that long ago, NFTs were basically synonymous with digital art,
Yeah.
collectibles.
Right. We're talking about that first big wave, Beeple selling for $69 million, the first tweet going for millions, NBA Top Shot just blowing up. It really felt like this unstoppable trend.
Totally. And then, well, the bottom just dropped out.
Yeah.
By mid-2022, as one of your articles, I think it was the Metana one, highlights, trading volumes took a massive hit.
Massive how?
Like a 93% decrease from their peak, and the number of active traders fell by an incredible 96%.
Wow, 96%. It really makes you wonder if it was all just, hype, a bubble that popped.
It looked like that for a while, yeah.
So we've got material here from Metana, Forbes, Science Direct, GamesPad, and Space, all looking at what the future might hold.
Right.
Our goal today really is to figure out if NFTs are still relevant in 2025, and maybe more importantly, what actual tangible purpose they serve now. We're trying to understand how they've changed since that initial frenzy.
Exactly. The focus has really shifted away from those eye-watering price tags towards real-world usefulness. My role here is to kind of help us connect the dots, see the bigger picture of these changes.
Okay, great. So let's unpack this shift then, towards utility. That seems to be the big theme jumping out from all these sources, right? It's not just about bragging rights for owning a digital image anymore.
That's spot on. The GamesPad piece really emphasizes this maturation where it's genuine utility, not just a novelty factor, that's giving NFTs, lasting value.
And one of the biggest places we're seeing this utility is in gaming. But it's different now, isn't it? Different from that old play-to-earn idea. It feels more about actually owning your in-game stuff.
Yeah, definitely. What's fascinating here is how it could fundamentally change the whole relationship between players and the game developers.
Oh, so...
Well, as Metana points out, major studios are integrating NFTs, so players truly own their in-game items. Yeah, skins, characters, maybe even virtual land.
Right.
And crucially, they can trade or sell these things outside the game itself.
Oh, okay.
This could lead to totally player-driven economies, maybe even extend the lifespan of games. Though it also raises some interesting questions about how you balance those economies.
That's a huge difference in digital ownership.
Right.
Okay, then we look at fashion. And it's not just about looking cool in the metaverse, though I guess that's probably still a thing for some.
Yeah, probably.
But there are actual practical reasons luxury brands are looking at NFTs now.
Yeah, the Forbes article touches on a really key one: digital authentication.
Okay.
Luxury brands are starting to use NFTs to verify the authenticity of their physical goods. Think about it. This could have huge implications for fighting counterfeiting in the industry.
Right, that makes sense.
And potentially lead to cost savings in, like, tracking and verifying products. Plus, as we all spend more time in online social spaces, virtual fashion, as Metana notes, is kind of evolving. It's moving from just a novelty to something more significant for our digital identities.
And it gets even more concrete with real estate. I was really interested in this idea of property tokenization you mentioned.
Yeah, this is where NFTs can allow for fractional ownership of physical properties. GamesPad explains this one.
Fractional ownership. So, I could own a tiny piece of an apartment building.
Exactly.
What?
Suddenly, investing in real estate could become accessible to way more people, potentially increasing market liquidity. Of course, there are still regulatory hurdles to figure out, but the potential is definitely there.
Okay.
And, beyond that initial speculation phase, virtual land in metaverses is also starting to show some actual utility, according to Metana. It's not just about buying a digital patch of nothing anymore. It's becoming more about what you can actually do with it.
That's a really big leap. And it sounds like NFTs are also providing a new way for creators, artists, musicians, athletes to connect with their fans and actually, make a living.
Yeah, the creator economy is seeing a real benefit here. Instead of just those one-off, sometimes speculative NFT drops, artists and athletes are using them for more sustainable fan engagement.
Like memberships.
Exactly, like membership programs offering exclusive content, maybe early access, community participation. Metana highlights that this is particularly valuable for, say, mid-tier creators who are looking to build a more stable income stream, not just rely on blockbuster hits.
Okay, so utility, utility, utility. That seems to be the key driver now. But it's not just these sort of tangible applications, is it? NFTs are also starting to pop up in the financial world. DeFi.
This is a really interesting development, yeah. As GamesPad outlines, NFTs are beginning to play roles in decentralized finance, or DeFi. And DeFi is basically a way to conduct financial activities, lending, borrowing, trading, without the traditional middlemen like banks.
Okay, so like using your, I don't know, your CryptoPunk as collateral for a loan, is that the kind of thing?
Sort of, yeah. Maybe not always a CryptoPunk, but platforms like NFTFi, JPEG, and Bendy.io, which GamesPad mentions, are allowing people to use their higher value NFTs as collateral for crypto loans.
Sure.
This lets them access funds, get liquidity, without having to actually sell their digital assets. It's a way to unlock value that was previously just kind of stuck there, illiquid.
That's actually pretty clever. And it's not just digital collectibles being used like this, right? We're also seeing the tokenization of real-world assets, or RWAs.
Exactly. GamesPad explains how NFTs are being used to represent ownership of real-world things, shares in real estate, like we mentioned, but also maybe rare wines, even music royalties.
Music royalties, really?
Yeah. The NFT essentially acts as this digital certificate of ownership, which is tamper-proof because it's on the blockchain. So instead of piles of physical paperwork, you have this secure digital token representing your share.
So potentially you could own like a tiny fraction of a famous painting or a percentage of the royalties from a hit song, all represented by an NFT.
That's the vision, yeah. And it extends even further. GamesPad also mentions exploring financial NFTs for more complex things like options contracts, maybe insurance coverage, even yield-generating vaults. You've got protocols like Solve Protocol and Tranche Finance innovating in this space.
Wow, okay. NFTs moving into serious financial instruments, that's quite a jump from, digital cat pictures.
That really is.
Now, beyond finance and these high-value items, it seems like everyday brands are also finding ways to use NFTs, like stuff you and I might actually interact with more often.
Absolutely. Loyalty programs are a prime example. They're being totally reimagined. You know how traditional loyalty points can often feel a bit restrictive, maybe not very rewarding?
Yeah, and they just sit there.
Right. NFTs offer a potentially more dynamic and maybe even more valuable approach for consumers.
The Starbucks Odyssey program is a great example, isn't it? GamesPad points that one out. Instead of just getting points, you collect these NFT-based journey stamps for doing things like trying new drinks or learning about coffee.
And what's really significant there is that you actually own those digital stamps, those NFTs. As GamesPad notes, you can potentially trade them or just hold them in your digital wallet, maybe even use them across other online platforms, what people call Web3.
Right.
That's a level of flexibility and ownership that traditional loyalty programs just don't offer.
And it's not just Starbucks doing this. GamesPad also mentions Nike, especially with their RTFKT acquisition, Adidas, even Taco Bell experimenting with NFTs. It seems like it's about engaging customers in new ways.
Yeah, turning customers into more active participants, giving them a tangible, ownable piece of the brand experience.
And this could lead to more interoperability, too, like loyalty points that work across different brands.
That's the potential, as GamesPad suggests. Imagine earning loyalty NFTs from various brands and being able to, say, exchange them or use them within a bigger ecosystem. It could break down those traditional silos where your points are stuck with just one company.
Okay, so beyond simply representing digital ownership, NFTs have this fundamental ability to prove ownership and verify authenticity in a much more robust way. Is that fair to say?
Yeah, that's really a core strength. The Forbes article emphasizes this. Each NFT has a unique identifier, right? Recorded permanently on the blockchain. This allows for basically irrefutable proof of ownership. And you can validate authenticity through the metadata attached to the NFT. This applies not just to digital collectibles, but potentially even to physical objects tracked through the Internet of Things, or IoT.
And it also seems to build stronger communities around brands or projects.
Definitely. Holding a particular NFT can grant you exclusive access to perks, like we talked about with loyalty programs, or maybe special channels in a community. And as Forbes notes, it gives developers this transparent on-chain data about their audience without needing invasive tracking.
Okay. It creates a direct link.
Exactly. A shared identity among holders.
Now, the technology itself isn't standing still, is it? It's advancing, leading to some really interesting new forms of NFTs. I saw the term hybrid NFTs mentioned in the Space article. What's that about?
Yes, this is a fascinating area that Space highlights. Hybrid NFTs essentially bridge the gap between the digital and the physical worlds
How do they do that?
by linking a digital NFT to a tangible asset, like a physical product or maybe a real-world experience or even a specific privilege.
Oh, okay. So like Nike's Kicks, where owning the digital NFT proves you own the actual physical sneakers.
Precisely. That's a great example. Space also mentions things like luxury watches that come with an accompanying NFT acting as a digital certificate of authenticity,
Hmm.
or event and membership NFTs that grant VIP access or exclusive real-world benefits.
Right.
It's all about enhancing security, sure, but also adding tangible, real-world utility to these digital assets, making that connection.
And then there's the whole emergence of NFTs on the Bitcoin blockchain. I mean, I always thought Bitcoin was just, digital gold,
Crypto.
cryptocurrency.
Yeah, that's the common understanding, but things are changing. Space details how NFTs are now appearing on Bitcoin, mainly through protocols like Ordinals and the newer one, Runes.
Ordinals, what do they do?
Ordinals allow data, could be images, text, other things, to be directly inscribed onto individual Satoshis. Satoshis are the smallest unit of Bitcoin, like a digital cent.
So these inscriptions are actually stored on the Bitcoin blockchain itself, permanently.
Exactly. Space emphasizes the benefits of this. Truly on-chain storage, leveraging Bitcoin's inherent scarcity, and its, very robust security model.
Interesting. And runes.
Runes came a bit later. They're designed to handle fungible tokens like regular cryptocurrencies, but also NFT-like functionalities on Bitcoin, supposedly in a more efficient way. Ordinals caused a bit of debate about network congestion on Bitcoin. Runes aim to be more optimized for Bitcoin's structure, potentially paving the way for a whole new ecosystem of Bitcoin-native digital assets.
It's pretty surprising, isn't it, seeing the oldest cryptocurrency blockchain exploring these new kinds of applications after all this time.
It really is.
And Forbes also mentioned NFTs and the Internet of Things, IoT. That sounds almost like science fiction.
It does a bit, but the synergy is actually quite logical when you think about it. As Forbes explains, NFTs can provide unique digital identities for all sorts of IoT devices.
Like what? Your smart fridge gets an NFT.
Potentially, yeah, or components in the manufacturing process. This enables secure data storage, enhances transparency in complex supply chains. Imagine being able to track the entire life cycle and authenticity of every single component in, say, an airplane engine using NFTs.
Wow. Okay, so every individual component could have its own unique, verifiable NFT identity.
Precisely. And Forbes also talks about something called decentralized physical infrastructure networks, or DePIN.
DePIN.
Yeah, these are basically projects building real-world infrastructure. Think decentralized energy grids or community-owned wireless networks in a distributed community-owned way.
Okay.
NFTs can play a crucial role here in tracking ownership of the infrastructure pieces, recording contributions, maybe managing governance within these DePIN projects. It adds this layer of transparency and accountability that's hard to achieve otherwise.
It really feels like this evolving NFT technology is finding its way into all sorts of different corners, different industries. The space article specifically highlighted music and sports.
Yeah, those are two sectors where we're already seeing quite significant adoption, moving beyond just speculation.
How so in music?
Well, Space points out how NFTs are being used for things like exclusive music releases, maybe limited editions, also as a new form of digital ticket, maybe with added perks, and through royalty sharing models.
Royalty sharing.
Yeah, platforms like Royal or Audius are exploring this, offering artists potentially more direct ways to connect with their fans and generate revenue streams by selling shares of their future royalties via NFTs.
Interesting. And in sports. It's going beyond just digital trading cards now, although things like NBA Top Shot are still around.
Oh yeah, Top Shot is still popular. But Space also highlights other things, like tokenized tickets that might offer special VIP experiences, and fan tokens.
Fan tokens.
Yeah, issued by major clubs like FC Barcelona or Paris Saint-Germain. Holding these tokens can give fans certain voting rights on minor club decisions or access to exclusive content, other engagement opportunities. It's about creating a deeper, more interactive connection between fans and their favorite teams or athletes.
Okay, so the initial, maybe frothy buzz might have died down quite a bit, but it sounds like NFTs are definitely finding these very specific practical uses across the board. But there must still be some challenges, right? Some bumps in the road.
Oh, absolutely. The Metatan article rightly points out that challenges definitely remain. While that extreme volatility we saw back in 2021 has subsided somewhat, market fluctuations are still a factor you have to consider.
Sure.
Regulatory uncertainty is another big one. We've seen legal cases pop up in the NFT space, and the rules aren't always clear globally.
Right, the legal side is still catching up.
Exactly. And then there are the technical limitations, things like scalability. How many transactions can these blockchains handle smoothly? interoperability, how easily can NFTs move between different blockchains, and just the user experience.
Yeah, wallets and gas fees.
Right. Managing wallets, dealing with transaction fees or gas fees, making all that more seamless is still pretty crucial for broader mainstream adoption.
These sound like the kinds of obstacles that could definitely slow down how quickly NFTs get integrated into everyday life. But despite these hurdles, the overall outlook seems, well, quite positive, at least in terms of market growth projections.
It does seem that way. Matana cites market projections, estimating something like $84 billion in growth in the NFT sector between 2025 and 2029.
84 billion.
Yeah, with a strong annual growth rate projected at over 30%. This suggests there's still a strong belief in the long-term value, probably driven by these real-world applications we've been talking about.
Okay.
And Space gives us some more specific figures just for 2025, projecting market revenue around $608 million, with over 11 million users globally. That points towards a more grounded, more utility-focused market than before.
And it's interesting to see where that future growth is expected to come from. Matana mentions things like AI-generated content being authenticated via NFTs, NFTs enabling true ownership in virtual worlds, physical products being linked to digital ownership certificates, like we discussed, and even NFTs being used as collateral in more sophisticated financial ways. It all points towards a future where NFTs are much more sort of woven into the fabric of things.
Definitely. And, there's a really interesting point that comes from that Science Direct article, specifically about brands using NFTs as digital extensions.
Okay, extensions of their existing products or services.
Exactly.
Yeah.
It suggests that while there's potential upside, there could also be some unexpected downsides for the original brand itself.
Unexpected downsides. Like what? You mean a brand's NFT campaign could actually hurt how customers feel about their main products?
That's what the research seems to suggest, yeah.
Yeah.
The article indicates that while factors like how well the NFT fits with the brand image, the overall strength of the brand, the actual utility the NFT provides, even just how many NFTs they release, while all that influences success,
Right.
there's apparently a real risk of negative spillover onto the parent brand.
Huh. So launching an NFT could actually damage the main brand.
Potentially, yes. It highlights that brand managers need to be really careful. They need to think about the differences between physical and digital environments and realize that just jumping into the NFT space isn't automatically a win. It could maybe damage customer perceptions of the original brand they've worked hard to build.
Wow, that's a really crucial warning for any company thinking about dipping their toes into NFTs. It's not just about chasing the next shiny thing. There are potential risks to your core business to consider.
Precisely. It requires a very thoughtful, very strategic approach, not just a knee-jerk reaction.
Okay, so let's try and bring it all together then. It seems really clear that the whole NFT landscape in 2025 is vastly different from that speculative frenzy we saw back in 2021.
Absolutely. Night and day almost. We've witnessed a significant evolution from, digital collectibles driven mostly by hype and scarcity to becoming practical tools with actual utility across a really diverse range of industries.
Yeah, we've talked about their use in gaming, fashion, real estate, empowering creators, their role in DeFi as part of new kinds of loyalty programs for proving ownership and authenticity, and even how they're integrating with emerging tech like IoT and DePIN.
Mhm.
The key takeaway really seems to be that these real-world applications and the ongoing technological advancements are what's really driving their development now, not just speculation.
So to directly answer that question we started with, yes, NFTs are definitely still a significant thing, a significant part of the digital landscape. But their purpose, their application, it has undergone a fundamental shift. They're evolving into more specialized components, tools for addressing specific challenges around digital ownership, authenticity, and how we exchange value online and even offline.
Right. So while maybe the flashy headlines about million-dollar JPEGs are mostly in the past, the underlying technology, the core idea behind NFTs is quietly becoming integrated, weaving itself into both our digital and even our physical lives in these different ways.
Seems that way, yeah.
So what new, maybe unforeseen uses and integrations will emerge next as this technology continues to mature? Well, that's a deep dive worth continuing on your own.